It's the limit order versus the cash secured put. I put these two acquisition strategies together in a head-to-head competition to find out which one will reign supreme. Watch this video to find out which one saved me 13%. Just a quick reminder, there's only 5 days left to become a member of my Patreon at the special 50% off price. You can get this special price by heading over to my Patreon page at patreon.com/simpleoptiontrading. After the special ends though, the membership price will increase to $10 a month. So if you're even thinking about joining, you may want to do it now because the special pricing offer ends on March 14th, 2021. If you're new to my channel, welcome. Here you're going to find that I'm publishing videos about selling options for income and other wealth building strategies. In this video, I'm sharing a comparison that I made between acquiring shares with a limit order versus a cash secured put. Now, the two choices have two different approaches, but in the end, the outcome is basically the same. It's a way for me to acquire some shares of stock. Now, I'm going to walk you through my comparison, talk a little bit about the pros and cons of each, and I'll also reveal to you which one saved me 13%. Okay, let's get started. I'm going to use a table to perform a comparison of the two different acquisition strategies. Number one, I could use a limit order, or number two, I could use a cash secure put. For the purposes of this comparison, I'm going to be using a stock from Comstock Mining, symbol LODE, which currently has a price of $4.11 per share. For both strategies, my objective is to acquire 100 shares. Now, the current price is trading at $4.11. But I don't want to pay the current market price. I'd rather pay $3 per share. That seems like a more fair and reasonable value. So if I'm able to acquire the shares at $3 per share, my total cost for the purchase of 100 shares would be $300. So far in this comparison, both the limit order and the cash secure put are equal and have no difference. That is until now. Here's the first difference between the two. For the limit order, the market price must dip to $3 per share, and at that point, my limit order would get executed. Now compare it to a cash secure put, where the market price must dip to the $3 per share on or before the expiration date. Additionally, the price could take a sharp and immediate dip to below $3 a share on or before the expiration date, and I would still be obligated to purchase the shares. I'll talk a little bit more about this in a few moments. Next, let's compare the discount or the premium received. For the limit order, there is no discount or premium. For the cash secure put, I would receive 40 cents per share as a premium payment, and this money would be mine to keep forever, independent of whether the option contract gets executed and I'm assigned the shares, or if the contract expires worthless. Next, let's compare the disadvantages with each approach. For the limit order, I think the disadvantage is that I wouldn't receive a discount or a premium. For the cash secure put, if the market price dips below the $3 per share, I'm still obligated to pay the $3 per share as per the contract. Now, for example, in the limit order, when the price dipped to $3 per share, you purchased the shares for $3. In the cash secure put, here's the major disadvantage. Let's say the price dips to $2.90. Well, because of the contract, I'm still going to have to pay $3 per share, even though the actual market price is $2.90. For a lot of investors, that's a showstopper. But for me, as an experienced options trader, there are specific techniques used to minimize that risk. Next, let's compare the cost basis for each of these different strategies. For the limit order, the cost basis is $3 per share. For a cash secure put, the cost basis drops to $2.60 per share. That's a savings of 13.3%. But why is it? Why is the cost basis lower, and how did it get to $2.60 per share? Well, when I sold the cash secure put, I received 40 cents per share in premium. So I pay $3 per share, and then I subtract the 40 cents per share that I received as my premium, and so that difference is my cost basis, which is $2.60 per share. Next, let's compare the two different approaches in a what-if scenario. What if I were to sell all 100 shares and receive $3.30 per share? In the limit order approach, I would receive $330 per share, and that's computed by taking the $3.30 per share and multiplying it by the 100 shares. For the cash secured put approach, I would be taking the 100 shares that I acquired when the shares were assigned to me, and I'd be selling them for $3.30 a piece. So for the 100 shares, I would receive $330. Let's continue the what-if scenario comparison by looking at the profit now for each of the different approaches. For the limit order approach, my profit is $30. This is computed by taking the amount of money I received from the sale of the shares, the $330, and subtracting the $300 I had to pay, my acquisition cost, otherwise known as my cost basis. Now let's look at the profit that I would receive if I were to sell the shares that I acquired through the cash secured put. My profit in this case is $70. This is computed by taking the money that I received from the sale of the shares, that's the $330, and then subtracting out my cost basis, which is $260. So the difference between the $330 that I received from the sale and the $260 I paid for acquiring the shares is $70. So in the what-if scenario, my profit using the limit order approach is 10%, which I compare to my profit using a cash secured put approach, and that profit is 26.9%. So here's my question to you. Would you consider using a cash secure put option contract to acquire shares of stock instead of issuing a limit order? Tell me why or why not by leaving a comment down below. I opened up my trading account so you can see the decision I made and the action I took. Let me open the transaction so you can see the details. So this transaction's for stock symbol LODE, and I sold a put with a $3 strike price that expires on April 16th of 2021. My order was filled on March 8th, 2021 at 7:04 a.m. Pacific time. And when this option contract got filled, I actually got paid 40 cents per share. I received an immediate $40 credit as the premium deposited into my account. If you enjoyed this video or if it was helpful at all, do me a huge favor and please smash the like button. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.